headlines say crypto is finished, prices are pulling back, volume is drying up, and retail interest is basically non-existent. Google searches for crypto and Bitcoin are at cycle lows. Your friends aren't asking about coins. No one is bragging about gains. And the mood feels more like a funeral than a bull market. But that's exactly the point. This doesn't feel like the top. It feels like a bottom. Historically, the best entries happen when nobody cares anymore. That's when you dollar cost average, when you quietly accumulate the assets you still believe in, instead of chasing whatever's trending. And here's why I'm not worried. Every major move in this cycle has been driven by a very clear, very real catalyst. In 2024, Bitcoin exploded because of a double event: spot BTC ETF approvals plus the halving that gave institutions a regulated on-ramp and hard-coded a supply squeeze into the system. Then, early 2025, we watched Solana rip because even the US president launched a meme coin on SOL. Like it or not, that was political attention and cultural momentum focused on one chain. More recently, the Genius Act, the US stablecoin bill, flipped the switch for stablecoins and the companies behind them. Circle's CEO went on CNBC and literally walked through how USDC volumes exploded to over $9 trillion in a single quarter. That wasn't a random pump. It was regulatory clarity unlocking adoption. So when people say catalysts don't matter, the data says otherwise. Each time regulation or policy opened a new floodgate of capital. The Genius Act didn't finish the stablecoin story. It started it. Once the rules became clearer, stablecoin usage took off. Total stablecoin market share has continued to grow, and Ethereum's dominance over that market has climbed from the high 40s to over 55%. Solana's slice is creeping up too, while Tron's is starting to slip. That tells you where the smart builders and users are migrating. Stablecoins are not just some side product. They are the Trojan horse for the entire crypto ecosystem. When trillions of dollars sit in compliant, yield-bearing stablecoins, that money doesn't magically go back to traditional banks. A huge chunk stays on-chain. Some of it sits in stablecoins earning yield. The rest seeps into DeFi, into altcoins, into new protocols and applications. Even Circle's CEO has said it plainly. Stablecoin money is safer money in many ways and could become the most desirable collateral in global credit markets. The big vision is that credit systems, lending rails, and payment infrastructure get rebuilt around tokenized dollars instead of legacy bank IOUs. That means every time a stablecoin gets minted, you're not just looking at a static balance. You're looking at potential liquidity that can flow into the wider crypto economy. So one catalyst in the Genius Act led to regulatory clarity, which led to adoption, which led to explosive growth for stablecoins and the chains that support them. Bitcoin got its turn with the ETF approvals and halving. Stablecoins got their turn with the Genius Act. And now, the next stage is lining up. So what's the catalyst that almost nobody is talking about right now? It's the Clarity Act, the broader market structure bill. If the Genius Act was the stablecoin chapter, the Clarity Act is about the whole crypto industry. Exchanges, tokens, market structure, and how these assets are classified and traded in the United States. This bill already passed the House with bipartisan support, which in today's political climate is rare. It now sits with the Senate. The only thing that really froze progress recently was the U.S. government shutdown. You simply can't push complex regulation through when the entire government is paused. Prediction markets like Polymarket were tracking this in real time. When the shutdown hit, odds of the Clarity Act passing in 2025 dropped into the low 30% range. Not because the bill lost support, but because nothing moves when the lights are off in Washington. Now the shutdown is ending. The process can resume. And while mainstream media has mostly moved on, the odds and the process haven't disappeared. If you think this bill will pass and you trust your conviction, those same prediction platforms are literally offering you asymmetric bets. Small amounts of capital for potentially big payouts if the Clarity Act becomes law. But even if you never touch a prediction market, the bigger point is this. Just like the Genius Act laid down the rules for stablecoins, the Clarity Act aims to define the rules of the road for crypto as a whole. That means clearer classifications of what's a security, what's a commodity, which regulators handle what, and how exchanges and custodians must operate. Once those rules exist, many institutions that are currently interested but hesitant suddenly have a legal map they can follow. New products get approved, more assets can be listed, and bigger pools of capital can finally participate without fear of regulatory whiplash. That's not a meme coin pump. That's a structural re-rating of the entire asset class. None of this means crypto can't dump in the short term. It absolutely can. If Bitcoin closes decisively below key moving averages, if macro data sours, if risk markets wobble, we could see 1, 2, even 3 months of chop or deeper correction. That's the reality of a volatile asset class. But zoom out and look at how previous catalysts actually played out. After the Bitcoin halving and ETF approvals, price didn't go straight up forever. We had stretches of sideways action, fake breakdowns, ugly consolidation. The same after the election and the Solana president meme coin narrative. There were windows where people thought the move was over, only to see another wave of capital hit when the next phase of adoption arrived. If you're trying to perfectly time every top and bottom, good luck. Some people can do it, most can't. That's why for many investors, the rational approach is different. Recognize that this isn't a one-year trade. It's a 4, 5, 10-year story built around regulatory clarity, global liquidity, and the gradual migration of financial rails onto blockchains. In that story, catalysts like the Bitcoin ETF, the Genius Act, and the upcoming Clarity Act aren't isolated events. They're stepping stones in the same direction. Right now, while everyone is screaming, "It's over," we're likely in another one of those stepping stone phases. The market is tired, sentiment is low, and most people are looking backward. But policy is still moving, stablecoins are still growing, institutional rails are still being built, and the next major regulatory unlock is already on the table. You don't have to go all in. You don't have to be reckless. But if you believe in this space long term, this kind of environment, low attention, high fear, and a real structural catalyst approaching, is usually not a time to panic out. It's a time to study harder, refine your portfolio, and make calm, deliberate decisions while the crowd is emotional. Crypto isn't over. The hype cycle might be. The noisy part might be. But under the surface, the laws, the rails, and the capital flows are still evolving. And the next big move often starts when almost nobody is watching.